Welcome everybody to the next presentation on our supply chains track at Insight 2020. This is Pranav Rao again from Smartkarma's research team. I'm pleased to introduce Robert Meyer, the CEO of Halcyon Agri. Halcyon Agri is a SGX listed company and one of the world's leading natural rubber franchises with over $2 billion in sales and 17,000 employees globally. Robert is passionate about committing to and promoting the use of sustainable rubber. Robert, over to you, and to learn more about Halcyon Agri supply chain. I can share your slide deck if that is easier for us to do.
Yes, please, go ahead. Can we do a quick audio check? Can you hear me well?
I can.
Good.
And you should be able to see your slide deck here.
Okay, can I manipulate it from here too?
Unfortunately not, you might have to give me instructions, sorry.
Okay, well, good afternoon, everyone. Thank you, Pranav, for your very kind introduction and for the opportunity to speak with you today and to address our audience. I understand this is a more or less interactive format, so questions will be answered as they popped up. And I thank you in advance for your interest. Can we go to the first content slide? And the next one. Okay, the world map of rubber, and I'm going to make this quick. I think most of you might have an idea of the basic fundamentals of rubber, but if you don't, we'll just quickly go through this. So rubber comes from a tree. The tree originates in Brazil, but it's found its way across the equatorial areas, the tropical equatorial areas, since about 120 years. It is limited in its ability to be planted to an area which is roughly 15 degrees north-south of the equatorial belt. Predominant areas of origin are Southeast Asia. Southeast Asia accounts for 90% thereabouts of global supply. Key areas of consumption, if you take a look at where the rubber is shipped to, not where it is ultimately consumed. No, would you go back, please?
Sorry.
Yep, anyway, key areas of consumption are China. China is the world's most significant producer of tires, and we'll get to the applications, but just to foreshadow that, tires are the main use case for natural rubber. Besides China, we have Southeast Asia, very strongly growing at the moment, 2.2 million metric tons. China was 5.5. India, again, a market which is growing 1.1, and we have Europe and the USA relatively flat, with 1 million tons or thereabouts. All these numbers add up to relatively simple mathematics: 14 million tons, roughly 14 million hectares, 85% smallholder farmers, and the majority of rubber going into the tire. Next slide, please. Next one. Okay, so here we come to the use cases. Rubber is a household good, even though we trade it and treat it like an industrial commodity. So the key use case are tires. Pranav, if you just go back to the previous slide, I'll give you a heads up to.
Yeah, apologies, there's a bit of a delay.
Okay, so as you can see here, the number one use case is tires. That's roughly 3/4 of natural rubber goes into tires. Number two is everything else, which really covers the waterfront. So we are talking about automotive, non-tire, we're talking about industrial products, and increasingly and quite relevant to current times, the medical side, PPE, tubing, catheters, and of course gloves. Okay, next one. In tires, tires come in many shapes, forms, and sizes. A little anecdotal joke perhaps on the side. If anybody asks you who the largest manufacturer of tires by number is globally, the answer is not Bridgestone, it's actually Lego. They make the most tires. But jokes aside, in terms of real life applications, you can say that 50% of the 75% of natural rubber that is consumed by the tire industry goes into passenger car tires. And the combination of truck and bus, off the road, and aircraft tires account for the remaining 50%. Next slide, please. Okay, so if rubber is primarily used by tires, and tires obviously are primarily used to move people and things around. That means that the use of rubber ultimately ties to mobility. And this is a story which is evolving quite dynamically at the moment. And there have been a few inflection points that I'd just like to highlight to you. The car is obviously the industrial growth story of, at the very least, the first half, if not most of the last century. It's been around for a long time, and we have long data sets to analyze how GDP growth correlates to miles driven. And the bottom line, even though I don't think we have that slide in this presentation, is that it correlates to an R square, which is greater than 1. So that means that for every dollar of GDP gain, you get a little over $1 of mobility consumption and thus use of the inputs into that mobility. For a while, this relationship was relatively constant. There was the first inflection point when mobility as a service came up, and we had companies like Grab and Uber and Lyft and the likes basically make vehicle transportation available to more people without having to own a car. The second, I think, transformational event is almost here. In fact, we are kind of heading headlong into it, especially given the current background. And that is a step back from public transportation into personal transportation. We can already see it that in China, coming out of lockdown, the April car sale numbers are strong. More importantly, the April and May traffic jam numbers in China are at record levels, which strongly suggests to me that people, as they resume life and mobility, seem to be looking for a vehicle of sorts, whether it's a mobility as a service or whether they hire a car. In fact, I was also told by a leading car hire agency in China that their April sales were ahead of their April 2019 figures. So this is year-on-year growth. Of course, that's quite rare given today's climate. So this is a very important thing. What car tires do not really correlate with, or a change which has not much of an impact or not too much of an impact on the use of tires, is the change of powertrain. So whether the car is driven by an electric engine or internal combustion engine or anything else, there are some small parametric shifts in terms of tire size and sidewall size, and but that's perhaps too much detail. But the broader context of natural rubber consumption being driven by mobility is not greatly deflected by powertrain. Next slide, please. So VMT, which is what the abbreviation here, this is vehicle miles traveled. And what you can see here is that this is a number which gains over time. It correlates in certain ways positive to low oil prices. I think we will post-2020 see a correlation to COVID. I think that's going to be an inflection point. But by and large, it is driven by GDP over a long period. What we see here is a 30-year CAGR. Next slide, please. Okay, so the use cases of rubber, I think I've summarized them already. One item I would like to point out as well, which is of course important, is infrastructure spend, and especially the investment in highways and road systems. At the moment, China is by far leading the world in its investment in road systems. Latest data suggests that China builds 11,000 kilometers of highways every year. This, of course, is part of the Belt and Road Initiative. And if you are interested to take a slightly deeper look at the link between natural rubber consumption as well as its origins and the Belt and Road Initiative, then I would like to direct you to our 2019 annual report, which is available on the Halcyon Agri website. Next slide, please. Now, the supply of rubber is where the headaches lie. Okay, if you can tag demand broadly to GDP growth with a couple of small inflection points, then the question really is, well, what about supply? And this is where the problem lies, because the majority of rubber, north of 90% by latest assessments, is produced by smallholder farmers. And smallholder farmers are subsistence farmers who work small plots of land between 1.5 and 2.5 hectares, roughly on average. in countries which are considered developing or frontier markets, the most sophisticated of which is probably Thailand, which produces 1/3 of the world's rubber. And then you have Indonesia with another third. And then you have countries such as the Indo-Chinese bloc, Malaysia, India, and China also producers, although not exporters, they remain net importers, and aspiring producers in West Africa, making up the rest. Be it Thailand or Ivory Coast, the language is different, the country is different, but the structure of the supply side is the same. In all cases, the small farmer is the original source of this product. It's a tree, it gets planted, it takes 5-6 years before you can tap it. Tapping is jargon for harvest. You can then harvest this tree for 25 years, even longer if that makes economical sense. And as you harvest the tree, you are essentially harvesting the latex that comes from making these small incisions in the bark and supplying that to rubber factories. And it is the rubber factory which is the only buyer of raw rubber material. We call it raw material. And it's the rubber factory that then converts it to the product that tire factories or any other rubber goods manufacturer buys. So we have a very consolidated landscape of tire companies. Top 10 tire companies in the world account for more than 80% of the 75% of rubber which is consumed in the manufacture of tires. The rubber processor side is increasingly consolidating as well. Globally, I estimate there are somewhere between 400 and 500 rubber factories, and these 400 or 500 factories are increasingly joining bigger groups such as ours to form multinational enterprises, or are sadly getting marginalized. Top 5 producers of natural rubber in today's world command roughly 50% market share. So if you have a consolidated immediate demand landscape, the rubber factory, and a consolidated ultimate demand landscape, the tire factory, this of course leaves a great imbalance of power to the smallholder farmer. And what we have seen is that smallholder farmers respond, and especially the politicians that they listen to who manage perhaps Ministry of Agriculture or something like that in these countries, they respond to bull markets with excessive planting and suffer in bear markets like we're in now, because the income generated by the tree at that point is no longer sufficient to feed their family. So where we are now, and I guess this is in the box marked future, is that prices have been stubbornly low for a number of years. If you look at the chart, and if we continue that, we don't expect them to shoot up anytime soon. At these price points, the farmer remains undercompensated, and the incentives for the farmer to take care of his crop, to fertilize it as he should, which protects it against diseases, as well, of course, as to invest in ultimately renewal of the crop when his trees are old, the incentive is zero. In fact, the incentive is such that were it not for the logistical difficulty of getting the rubber tree from its smallholding plot to a mill or some sort of a lumber yard, think backcountry Indonesia, for instance, were it not for that logistical difficulty, I think the rate of abandonment or deforestation of rubber trees would be much higher. Slight detour into the sustainability side. Deforestation of rubber trees, replanting, I think is not really an issue, ecologically speaking, but high price rubber markets tend to drive deforestation of rainforest, and that is a big issue. So we have a pricing system that is, because of its futures market dependence, designed or geared to create boom-bust scenarios. And unfortunately, there's always a loser. In bull markets, it's the environment that loses, and in bear markets, it's the social drama and ultimately the farmer who loses. Okay, next slide. Now, we spend a lot of time thinking, and we'll get into the disruptive nature of Halcyon Agri in a little bit. We spend a lot of time thinking about how we can change this. And we've done a lot of things to attempt to change it. One of the areas which is completely undiscovered source of potential revenue is the whole carbon sequestration capacity of rubber trees. So a rubber tree is a tree that is different than a oil palm, which is a palm. And the carbon absorption, or jargon sequestration, properties of a rubber tree approximate that of the original rainforest that it has replaced. Basis what's planted and what a metric ton of carbon is worth, this suggests that there is $1.2 billion in annual revenues, which are not being captured by the upstream supply chain in rubber, simply because the rubber tree has not yet been included in the catalog of eligible crops by the international carbon certification bodies. But that's one thing we're working on. Next one. Okay, COVID. What about COVID? Well, I've been looking at some very interesting developments in the food and agri space, which are being re-rated as we speak, and there are some fantastic success stories emerging there. And I think rubber is just around the corner. The drop in driven miles while people were locked down is evident. We, just like all other rubber producers, have not been able to sell the normal volumes in the months of April and May. Lockdowns are now coming to an end. What we can see already now in China, who are leading the pack, is that Chinese buying is back with a vengeance. Chinese, as I said earlier, traffic jams and vehicle rental and sales data suggest that people are not shy to consume mobility in whatever shape or form. And this is going to have a big demand boom on the tire and ultimately the rubber industry. And we forecast that sometime in late Q3, early Q4. The other thing, of course, is that COVID has tremendously impacted the business of latex gloves. Halcyon Agri is one of the largest suppliers of latex into the global glove industry, and we can see that side of our business humming along very nicely, with glove makers now coming out of lockdown, and most of them are in Malaysia, so they're coming out of lockdown, and once they will be able to switch back to 100% capacity, we're looking for some near-term catalysts there. Next one, please. Okay, so what lies ahead? This is a graph that sort of takes you back through history. In view of time constraints, I'm not going to spend too much on the past, but look at the future. If I can't point here, but if you look at the ball to the right in the second quadrant, exactly that one, what you will see is that's the situation where we are. And the industry right now has a huge opportunity to use technology to reinvent itself, to provide equitable incomes to farmers, to prevent further deforestation, and to drive investment into the industry, such that the global stock, the inventory of rubber trees, is rejuvenated in order to keep pace with the inevitable growth in demand for mobility. If we don't do that, and if this is an opportunity that not just we as a company miss, and we're trying our best to deliver on it, but if it's something that society and the industry misses, then what's going to happen is rubber prices at some point within the next 3 years are going to go stratospheric. And when they do, this is going to be a short-term fillip to companies like us or other plantation owners, or perhaps even a medium-term support, but it's going to cause further deforestation. And it's just going to repeat the drama boom bust from high prices and ecological damage to low prices and social damage. So this is a very important inflection point in the industry, and I'm now going to talk about what we're doing about it. Next slide. Okay, well, this is quite obvious. If you understand this risk and you can mitigate it, you can turn this into competitive advantage. We are developing a suite of digital tools to map the risk, to map supplies at origin, to map cargoes we go at destination. We are mapping farmers' incomes. We are mapping the exact regional sourcing and travel of raw material from areas where the tree actually is located to where the nearest factory is, and putting all this together in a system that furthers transparency. So transparency is what this industry, I think, can deliver on. And I think with transparency, we can drive global advocacy to bring consumers, and by that I mean the world at large that consumes mobility, the makers of cars who are increasingly held to more and more demanding sustainability standards, and of course the makers of tires who are our customers, into a framework where compensation along the supply chain is fair, which of course will alleviate the next crazy bull run in rubber prices and the ensuing social despair after that. So there is a huge opportunity to technologically reboot how rubber is sold and how rubber is marketed, and that will allow us to reboot how rubber is grown. And while you may think that lower prices would ultimately be to my disadvantage as a grower, for me, the most important thing is sustainable incomes. We as a plantation company run a very efficient plantation, and our prices will always be thereabouts where the smallholders are, if not a little bit lower in terms of cash costs. Over time, the acquisition cost of the plantation is, of course, to our detriment compared to the smallholder who normally gets the land for free. But in terms of cash production costs, it's hard to beat a well-run plantation. So we know where we sit in the cost curve. And what we're looking for is not 3 years of outsized returns and 10 years of no returns. What we're looking for is sustainable and budgetable income over the cost of production. And with that, we're fully aligned with smallholders. Okay, next slide. Now, this is the segue into our annual report. We can skip this one because we've covered most of the points here, but please do have a look. We've spent a lot of time doing that. We're set up in 3 companies globally. One is the Halcyon Rubber Company that supplies tire makers from 5 geographical manufacturing platforms. The other is Corrie McCall, which is our plantation business that caters to non-tire demand. This is where building a model plantation, how rubber can be produced sustainably across all fronts. And then we have our digital suites or digital products that provide us the tools to avail to the market the transparency that I'm advocating, which I think is the key to sustained returns in this industry. Next slide. Sustainability milestones. I think we are leaders in the world here. We took over certain assets which now form our Corrie McCall business unit in the years 16, 17. We have developed these assets and have, in a way, taken them from a space where they were not well regarded by the global community of NGOs, and we have now rehabilitated them to be, I think, benchmark setting in both the ecological and the social dimension in terms of what a sustainably run plantation could look like. Next slide. In doing so, we developed and have fine-tuned our 360-degree blueprint to supply chain sustainability. As you can see, there is a finely interwoven structure here between rules and standards that we develop, because there aren't enough external standards that we can draw upon in the rubber industry, that we then have validated with a global panel of NGOs, and that we then apply in our assets with a constant check and feedback loop through management. This is quite a unique system. It is ultimately ring-fenced by the Sustainability Council, which consists exclusively of non-Halcyon members of both industry and society, and that governs the interaction and our engagement on the sustainability front. Next one. I think we're coming to the end of it now. Yes, here we go. So thank you very much for your time. I'll now be responding to questions.
Thank you for that, Robert. We've got a few questions coming our way. First one is, what's your view on competition from synthetic rubber?
Synthetic rubber is a complement, not a competitor. So you need both synthetic and natural rubber to compound them in order to make a product like a tire. There is a degree of substitution which is around 5%, which is largely driven by price. But other than that, it is a non-competitive relationship.
Okay. There's another question in terms of shifts in rubber demand that you're seeing, especially from potential interest from the medical devices or medical fraternity. Could you shine a little bit more of a light on that?
Sure. I think protective personal equipment is one of the boom sectors coming out of COVID. And a lot of personal protective equipment contains rubber because rubber does one thing better than most other substances, which is to separate fluids. There are new forms of rubber, deproteinized ways of dealing with natural rubber that deproteinizes it, such that rubber no longer leads to a thing called the anaphylactic shock, which is something that a very small percentage of people have, which is why rubber gloves tend not to be used in surgery. But that's the smaller application case anyways. The big use case from airport security staff to people serving food, canteen businesses, all sorts of people who interact with other people on a day-by-day basis, the gloves that they wear tend to contain natural latex, and that is a use case which is on the up and up.
Okay. I'm not sure you can answer this question, but I'm going to put it across anyway. Do you have a view on why rubber futures have not participated in the accelerated sell-through seen in China autos with effect from April?
That's an excellent question, and whoever asked that question is clearly in the industry. The reason that hasn't happened is because the global tire industry is still coming out of lockdown. So while you have an acceleration in China, you still have the rest of the world, which is the other 55% in some low-speed crawl mode. So you put these two together, and you're going to have fireworks at some point in the not-too-distant future. In fact, I would go this far, and I would say I am surprised that rubber futures have held up as well as they have, and I'm still surprised at the strong contango structure in the market, given the fact that 55% of the world's rubber-consuming tire makers or tire factories currently are in some state of furlough. So that, I think, points towards the underlying tightness given normal operating conditions, which is also what we saw last year when within the year 2019, we saw prices recover gradually but sustainably from 1,250 to 1,450. So there is a lot of excitement that lies ahead, and I would like to have this discussion with you again at some point in November and see where we are then.
Great, sounds positive. Next question is, what in your view is the key challenge facing a processor like Halcyon?
The key challenge is to reinvent yourself from a business that has an agenda or an outcome which is opposed to that of the farmer, to becoming one that represents farmers or upstream interests. Okay, so for a rubber factory of old, the money-making gig was to buy as cheaply from farmers. For a rubber factory in the future, it will be to buy as sustainably as possible from farmers and to make sure that farmers are given the voice that they deserve in the supply chain, because without the farmer, you can forget about the rubber factory or the tire factory. You know, we ultimately are the commodity. The farmer, I think right now is that is the one that to take care, and I think the rubber factory of the future will balance that and will know how to represent the combined or the collective interest of producer and processor in the negotiations with consumers.
Great. I think that's a great way for us to wrap up. Thank you so much for the detailed presentation and running us through the history of rubber. Okay. We will be starting the next session shortly. Thanks again, Robert.
My pleasure. Thank you for your interest.